Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsarthi. And in this week's edition, I'm going to talk to you about how you, as an investor or a financial advisor who's advising his clients on retail investments, can actually trade in bonds. Now, investors and advisors have always been uh, under the impression that bond trading is very largely institutional. That is, it's restricted to banks, mutual funds, insurance companies, traders, primary dealers. Yes, to a very large extent, it is true. That is, the biggest volumes in the government bond markets are all the institutions. And even in the corporate bond market, it's all about institutions. And the reason why retail investors have not been able to trade in corporate bonds or government bonds is because of the fact that they've not been having a very easy access to the market in terms of both buying and selling. But now with platforms like INR Bonds, who allows investors to buy and financial advisors to help their clients to both buy and sell the bonds at the correct prices, then it gives a good amount of uh, opportunities for investors to actually make money and capital gains by trading in a relatively safer instrument than what they do on equities. So retail investors are pretty much used to trading in equities, and if you see the most of the volumes in the stock exchanges are all in the derivative segment, which is options. And I would say that options are the most complex of instruments for anybody to trade in. But given that it's such an easy instrument to trade, thanks to the exchanges, then they and to the platforms like on the which they can do on the app and all the tools that the platform provide, they are able to trade in options and futures and also cash market in equities. And similarly, they do it for commodities. And a lot of trading is also starting to happen on in currencies. But in currencies, it's more complex. And RBI has actually put out a list of platforms that are under the scanner for offering currency trading. So equities is very well known to investors, but and commodities also. But bonds have been almost non-existent in terms of trading opportunities for investors. And let me take you through how an investor can trade in corporate bonds and government bonds, but corporate bonds mostly because it's much safer. Uh, but before that, if you are a financial advisor and you want to advise your investors and clients for the best investment opportunities in fixed income, in is the best place for you is INR Bonds Partners, where we offer the best investments in bonds, the most information, the bonds to suit your clients' requirements, in our own proprietary risk model, and a wide variety of bonds to choose from, and the easiest of processes to transact in through our partner portal. It is almost similar to how you transact in Star MF. So log into INR Bonds and start investing in bonds for your clients now.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. I learned about INR bonds through other investment advisors. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
Back to search for yields. How do you trade in corporate bonds? So the best, the principle of trading is very similar, very simple. That is, you buy at a higher yield, say 10%, and look to sell it at say at a lower yield, 9%. But how does it happen? Why should the bond trade at 9% after you buy it at 10%? That's because maybe interest rates have come down. And if it's a corporate bond, maybe the market perception of the credit risk is lower, better. But even more important is that as the corporate bond comes down in maturity, in terms of if you buy a, say, for example, a 3-year bond at 10%, and the 2-year bond is trading at 9%. So after 1 year, you can sell the 10% bond in 1 year at 9%, and then you can make a capital gain plus a holding period plus the coupon, which gives you a very good holding period return. And if you do it, if you actually, the concept is that it's a very safe model to do that, because if you know the credit risk of the bond, and if you if the interest rates are outlook is pretty much stable, and all this can help you, and if the credit quality can improve, and all this can help investors to actually make money in trading corporate bonds. Both they get both a coupon return plus a holding period plus a capital gains, which is pretty much as good as trading any other instruments. And all this is offered on a platform like INR Bonds, where you can actually put in your sell price and your buy price, and if the transaction can take place at market levels. So that's the best part. And initially, investors are best off looking to not be very active in trading, but identify good bonds at the right yield, at the right maturity, and hold it for a while and then sell it down. So it almost becomes a trading strategy. And then they can keep doing this. So you would find that those investors who have been earning, say, 4% or 5% in products can be actually making 9 to 10% just by trading in safer instruments and identifying the right bond to trade in. And investors can also do this in government bonds. All they need to do is to sign up for RBI Retail Direct platform, and use the secondary market. They can buy bonds in auction, and if interest rates go down, they can sell it in the secondary market through the RBI platform itself. And it's very easy. Only thing is you need to know how to do it, and INR bonds will be the best place for you to know how to do it through our training program, through our knowledge sessions, through one-on-one sessions with our analysts. And we hold a lot of webinars as well for you to understand which bond to invest in terms of government bonds or corporate bonds, and then how to actually make money in trading these bonds without taking extra risk. So, that impression of where corporate bonds are now restricted to institutions and bond trading is restricted to institutions is now actually you can actually now make it that even you can trade in corporate bonds or government bonds through platforms like INR bonds. Most important is the bond should be liquid. The platform should be giving you the correct prices and the ability to buy and sell the bonds at market levels. And INR bonds is the best place for you to come to trade corporate bonds. If you're an investor and if you're a financial advisor, the best place for you is INR Bonds Partners. And do not forget to download our app, QuickInvest by INR Bonds, which gives you the curated list of bonds, where you can actually buy a bond at 10% and then look to sell it down going forward at lower yields to make capital gains. We give you the most information, obviously, and the transparency in prices and the best in-app investment process. Download the app now. Thank you very much for listening in.